is no policy. That's the problem. Is it FDIC insured? We don't have that yet. We've really got to get this stuff nailed down. Let me give you the rules by which those big boys play, and I'm using the same philosophy for crypto. We have 11 sectors in the S&P 500. Portfolio theory would tell you never more than 20% in any one sector, never more than 5% in any one stock or bond. That's diversification, and that's basically how 99% of sovereign wealth is managed by indexers like me and many others that are like me. And so I've done the same thing in crypto. I've said, okay, I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but I also have a big position in USDC, big position in FTX as an equity, which is a private company. And then on down, Polygon, I got involved with Sandeep. I liked his story. I met him in Dubai, trying to reduce gas fees on top of Ethereum. Makes a lot of sense for India and other countries like that, like what he's doing. I bought a piece of that. Love what's going on in the Serum projects. Solana, I'm a big fan of what Sam Bankman-Fried is doing. These things all make sense to me, but in the proportions of diversification. Now that portfolio, I'd say about 8 weeks ago, was at 21%. Now it's down at about 18. There's been a big correction in the market, but you've got to hold your nose and get used to the volatility. And it lets me adjust positions. I can add a little bit to my USDC. My compliance department doesn't consider USDC a money market or a proxy for cash. They consider it a highly volatile equity. That's because of what's been going on in stablecoin. So I'm limited to a 5% weighting there, and I'm trying to get some policy while I'm here in Washington. And remember, we go right back to that. Give me one thing. Just give me policy on stablecoins and let the market compete. And I could put a lot more into that space because I've got a lot of cash on my operating company balance sheets, and I have nowhere to put it. And inflation is 6, 7, 8%, and I'm getting 45 basis points in a bank. That's really crazy. I could do a lot more with stablecoins.
So that's funny. So you're saying even compliance is treating USDC, which is a stablecoin, which is one-to-one, pretty much one-to-one backed with money in a bank, actual dollars in a bank. You're saying that they're still treating that as a speculative asset. So it's hard to
challenge. That's the challenge. You can't get your compliance department on board because they say, show me the policy. Well, there is no policy. That's the problem. Is it FDIC insured? We don't have that yet. We've really got to get this stuff nailed down. That's why I keep telling everybody, get behind policy, because you're going to get a whole lot more capital into this space. There's 52 billion already in USDC. Tether's out there. That broke a buck, so I can't touch that. And of course, Luna was insanity. Well, we now know algorithmic-based stablecoins, well, they don't work so well, do they? So the market will figure that out, and they'll basically adjust accordingly based on risk and return. I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities, and a third of the engineers all want to go onto the blockchain. You can't take that much intellectual capital and not expect some incredible outcomes 3 to 5 years from now. So you want to invest in some of these people. These are the smartest hands over keyboards all around the world. They're not working for the traditional industries. They're on the chain. And that means there's going to be a lot of productivity there. That's what you want to bet on. It's like betting on Steve Jobs when he was just drawing fonts with a felt pen. That kind of idea. It's the same thing going on now. These guys are going to be big productivity for the economy, and you've got to put your money behind them. I give an example that everybody can relate to, because in the early years of Amazon 18 years ago, I was a shareholder, both in the equity and in the preference shares they used to have in those days. That stock corrected every 12 to 18 months between 38 and 58% every single year, over and over and over again. People just couldn't get their heads around what Amazon was doing. And it continued that way for a decade. It's no different than what's going on right now with Bitcoin and other cryptocurrencies, because there's no institutional demand yet for the product. People keep saying institutions are involved, but they're not at all. And so if we get one of these bills passed here in Washington, which is why I'm here, I would love to see this agenda item move forward so it can be decided on after the midterms. I'm sure Biden's very, very busy on other issues right now, but this isn't going away. And these senators and congressmen and women know this. And that's why they're bringing these and advancing them. All of these senators were all over cable TV today talking about this bill dropping, and it's not the only one. And certainly many of them will be discussing it in the weeks ahead. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to, but I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment. But boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today. This is the most misunderstood sector of the economy that's ever existed because of the complexity of how it works. Basically, policymakers do not understand it. And when you don't understand something, you tend to mistrust it. It requires education. It's taken me years and a lot of hours of reading and a tremendous amount of travel to get to the place where I'm comfortable making these investments now and understand how this works. But that's not easy to do. And the whole idea of a centralized and decentralized wallet, very many people don't understand the differences between it. And yet you need both in the crypto environment. You really want both. And one of the biggest investment theses I have about investing in WonderFi was it gave me both. There's a decentralized wallet, there's a centralized wallet. And I don't want to lose those customers. If all of a sudden you started by setting yourself up on BitBuy, which is the Canadian regulated centralized wallet, and all of a sudden you decided you want to have a decentralized wallet with your NFTs in it, I don't want to lose you as a customer. I spent hundreds of dollars acquiring you. I want to offer both with a know your customer platform that provides the compliance. And that's what they're building up there in Canada. And that software itself and all the millions of dollars of development they're doing is going to be cookie cutter for other markets, like potentially the Middle East or South America or Switzerland or England. That's the whole idea of being part of these things and pushing these projects forward. But it's education that's holding everybody back. We've got to simplify this stuff. Most people, the first time that try and set up a decentralized wallet on, let's say, MetaMask, lose their money because they don't know about security of the passphrase. And that's an important lesson to learn. And that's why I tell people, start with $200. Don't go crazy. Figure this stuff out slowly. Learn about security. Learn about password protocols. Learn about centralized versus decentralized. Check it out slowly. Baby steps into it. Then you can put up real money. And so I tell people, look, start slowly. Now, for me, USDC has become a very powerful payment system. Many and more time is going by and vendors are willing to take it. I'm willing to take it. When people want to pay me for goods and services in other countries, I say, give me USDC if you're allowed to. Don't ACH me any capital out of a bank. Don't send me Swiss francs, euros, or British pounds. That's just a total headache for me. Go figure out USDC and I'll take the risk myself on it. But, that's going to take a long time to happen. I tell everybody this is the future of currency. It's the future of payment systems. It's the 12th sector of the economy. Get over it and start learning about it. What's going to happen is nothing before the midterms, but we're getting close. After the midterms, when the House is settled, and who knows what it'll look like, but I have a pretty good idea, we're going to get some policy. And the first policy, in my opinion, personal opinion here, is going to be around stablecoins. And here's what it's going to look like. It's going to be an open competitive market, just like you can find a money market at Schwab or a money market at Fidelity or a money market at some other financial institution. They're slightly different. Stablecoins are payment systems, but they're also stores of value if you're willing to stake them out. You can make 4.5% on an annualized basis on a 30-day contract today, right now on USDC and other stablecoins. But here's the policy I see coming. It's going to look like this. 30-day audit on the assets underneath it. You can bring any kind of stablecoin you want, but there's going to be a 30-day audit and what's in there. No assets supporting the token or coin with a duration more than 12 months. So if you're going to use T-bills, they got to be short duration, probably average of 6 months duration. And that's very much like a money market is run and completely FDIC insured. There may even be one or two of these stablecoin operators that apply to become a bank and become FDIC insured, in which case they would get trillions of dollars. And the reason this is going to happen first, why the stablecoin market will happen first with policymakers here in Washington, is that it perpetuates the US dollar as the default currency of the globe. And this is why policymakers should get off their you-know-whats and get this thing done, because we don't want the Chinese doing that with the yuan. I would never buy the Chinese yuan as a stablecoin. Why? Because I know they're watching it. I don't want them watching my dollars. And I don't trust that currency. I trust the US dollar. So I wouldn't like to find out the Swiss franc did that before us. We got to get this thing done and make the US dollar king dollar all around the world. Everybody will be happy with a product that is backed by the US dollar one-to-one, is liquid, transparent. You can transfer immediately with a full ledger. And finally, I could say to my compliance department, look, we finally have policy. Let me go to a 10% weighting in this as opposed to locking me down at 5%. And they probably could get there because they may consider it a cash equivalent at some point. Very similar to money market accounts that very rarely break a buck. That's the whole idea. And that's what will happen next. Then we'll get policy on Bitcoin. Then we'll get policy on other chains.